Let's talk some stock picks and sectors, themes that have been bouncing back and forth. Growth versus value, cyclicals versus defensives. Which takes the next leg forward? Mark Travis joins us, President and CEO at Intrepid Capital Funds. Mark, your job is to find companies that are undervalued and buy stocks with real growth stories that you like, and companies that I would think have been the performers for the most part year to date, but over the last couple of weeks, investors traded like we were going back into quarantine, buying all the tech and hidey holes and such. So does that continue, or can we start trading this market like we're about to see a pickup in the economy again?
Well, Oliver, I think people are wearing masks again like we were going back into quarantine.
They are.
It seems like antibodies up, vaccinations up, mask wearing up. I can't figure out the correlation there, but all kidding aside, you know, it's been a wild year. I think we probably spoke about this time last year. And, you know, coming off the bottoms of trailing 12 months, you're looking at equity returns between, you know, 45 to 70%, depending on the index or the sector. Certain securities did better and certainly some did worse. But it's hard to argue they're giving anything away. I feel like as a lifetime surfer growing up in Florida and surfing a lot of different places in the world, right now we're just riding the wave. And but we have some things that we like. The cannabis industry, we think, is growing, and it's a very interesting business, particularly with a democratically controlled House and Senate, and certain laws are likely to pass in terms of recreational use in various states, as well as accessing that industry, the industry's ability to access the federal banking system, which I think will have meaningful impact on that industry. The software business, particularly the gaming industry, certainly was a hit, no pun intended, for Grand Theft Auto and others in the pandemic with people locked down. And then just the comfort of a nice pair of athletic shoes. Skechers is the third leading brand worldwide and certainly growing rapidly in China and India. And all those businesses have, the ones I'm thinking of, very nice looking balance sheets and generous free cash flow generation. So I think it's going to be interesting to see how we battle it out, inflation or not. You know, lumber, as you know, is at $1,200 a foot, and oil and gas are up considerably from the fall. And, you know, if you're trying to buy a house or build a house, there's certainly inflation. So we'll see. The 10-year backing off here at, you know, 159 today is certainly probably supporting longer duration, more growthy type names.
Mark, the balance sheet and cash flows, Take Two, have seen those earnings, certainly their Skechers as well. What about for the cannabis play? You've got an interesting one that you like, Trulieve, and I think that one is a little bit more under-discussed than Tilray, Afria, even maybe like a Constellation Brands, a bigger traditional company that now has ties into pot. Walk me through why you like that particular stock as a way to play this potential policy theme through pot.
Well, Oliver, there's an arbitrage right now between kind of domestic producers and different multi-state operators in the U.S. versus the Canadian ones. There's a kind of a 20x potential, we think, in that the equities, not Tilray, but Trulieve in particular, has really built a really nice business in the state of Florida, my home state. So today there's roughly 80 dispensaries in the state of Florida. They have to grow it and distribute it here. Sales per square foot are phenomenal for that business, and others in the industry approaching a Tiffany or Apple per square foot, somewhere in the neighborhood of $3,200 a square foot. You also have rapid growth rate. The medical license business in Florida is growing about 1% a week. You've got guys like me pushing 60 with bad backs and maybe struggling to sleep. They're, you know, looking for something to help with that. So there's like 500,000 medical licenses in Florida. So you've got rapid growth, 50% EBITDA margins, and growing demand. So we think of this as really coming off of almost like the prohibition being unlocked in 33, when they allowed alcohol to be resold after the prohibition period in the 20s and early 30s. So that's why we like it, and we think they're going to move into other states successfully. But it's politically controlled, as you might imagine, in terms of licensing and where they can do these stores.
How does a pot stock like this fit into your overall portfolio, Mark, in terms of how you gauge potential volatility? Again, it looks a lot different than a lot of the other wild pot plays where the charts are looking pretty ugly, even after all this policy stuff the last couple months. How do you kind of view it within some of the more traditional companies? Because you've got a lot of stocks here that folks generally think about as being kind of stalwarts of their sector, whether it's Take-Two and Games, Skechers within the consumer. How does a pot play fit into that, where most traders, I think, are seeing something similar to what we see in the MJ ETF, which has been a big pullback the last couple months? Can you still get volatility in a stock like Trulieve, or are those dynamics you're discussing going to keep it more insulated?
Well, I think if you look at the ETFs, they have to kind of own everything. We're trying to, proverbially, skim the cream, so to speak, which we think Trulieve is. It's obviously, to use a Ted Williams bat analogy, we're kind of reaching across the plate a little bit for something we think has a long-term growth trajectory. Position sizing you have to monitor. In terms of the risk involved. So you don't want to let it get too big, but it's certainly done well in the last 12 months. The way we come to it, Oliver, frankly, is through our fixed income work. These businesses have gone to the capital markets at double-digit coupons, very, very lightly levered, less than 2 times debt to EBITDA. So that's how we found it initially in our income fund. And then we started looking and feeling more comfortable down the capital structure as an equity holder, just due to their ability to generate cash and sales at such a rapid rate.
Okay. Mark, always like the dive into the companies here and to hear what you're buying right now. Appreciate the walkthrough. Thank you, Mark Travis.
You're welcome, Oliver. Thank you. Have a great day.
You got it. Mark's president and CEO at Intrepid Capital Fund.